Hi, Matt McAleer, President, Cumberland Advisors, with our CEO, the Moose. Wow, what difference 30 days makes, right, John?
Incredible, incredible. We had a November to remember, and now we're having a December to remember.
Yeah, that bond move in the 10-year from 5-ish, let's call it 8 weeks ago, to 390 or so today, that is pure positioning. It tells you, forget about the Fed, forget about inflation, forget about core CPI.
Right.
It tells you how negative people were positioned in the fixed income market at very elevated rates.
Incredibly. And it was people scared of the Fed. But remember, we didn't have the backdrop of necessarily bad economic information for bonds. You know, we still had kind of that slowdown. Inflation continues to grind down. We had good CPI numbers, good PPI numbers this week, but that's on a market where yields were moving down. We had good information when yields were moving up. That's how scared people were. So it was a remarkable move. And I think one of the things that is pretty remarkable is not only did you have the 10-year bond back at 5% in Treasuries, but you had the 2-year bond also above 5 in Treasuries. And today, that's at a 440, down 30 basis points this week. So there's no question the markets are starting to look ahead, take that periscope, look around the corner, and whether the Fed says they're thinking of cutting, the markets think they're cutting.
Sure do. And you see on the equity side, you see that in the bid in small and mid caps.
Right.
We spoke 4 weeks ago on this call about the extreme dispersion between the S&P, large cap,
right,
and IJR, the Russell 2000,
right,
had hit 20% performance dispersion.
Right, which is usually the widest it usually gets.
It's very rare, and historically, when it has touched there, there's been some buy-in on the small caps.
Right.
Now, sometimes it's large caps starting to fall.
Right.
Right now, listen, S&P, which was, when we talked about that, the S&P was up 18% or 17%, and IJR was up 2 or 3, right?
Right.
Today, IJR is up almost 14% year to date, S&P up, let's call it 23. So you've had that performance dispersion come in from 20% to 9% in 4 weeks.
Small and mid caps, giddy up.
So it's really, the market's always such a fantastic animal. It's so difficult to call anything by the day, by the week, by the quarter. You know who does?
Who's that?
The liars.
Oh, yes.
But anyway, in terms of seeing some performance across some of your core holdings, large and value, small, mid, and large.
Right.
Very nice to see. People talk about breadth in the market all the time, and specifically look at individual securities, for example, in the S&P 500.
Right.
It's important to really focus also on breadth of styles and size. And right now, everything's working, so it's a nice time. I do have to mention, because we always look at what can go right, what can go wrong. Dow Jones came into today 150% overbought on a weekly momentum indicator that we follow. That normally signals time for a pause or a breath or an exhale. So maybe we see that in the coming weeks. But strong momentum is positive longer term.
Right.
Just shorter term, we've come a long way in an awful short period.
And this move in Treasuries, of course, has brought Muni yields down a lot. Remember, they were back at 5% on the long end. They're down closer to 4 now. That's been a heck of a big move. And intermediate and shorter term yields also down. And, you know, that was in the wake of, you know, not a lot of supply, but, you know, this week, not down as much as Treasuries. It tells you that Treasuries are the guys controlling this movement right now. And, you know, as you go into the end of the year, the muni supply tends to dry up. It's very light between now and year end. And, of course, we'll see pretty good demand in January from rollover of maturing bonds, et cetera. But it'll be at least until mid-January until that supply ramps up. So,
okay.
Yeah.
Well, so far the last 60 days have been a nice way to close out the year.
Yeah.
Thank you for joining us. We'll see you next Friday. Enjoy the weekend.